I would always advise you to start with the education to make sure you understand it and how to use them and how to use them properly.
We're talking about trading products, but we've been very passionate about when they trade. And I'm talking about trading around the clock.
And from my point of view, it's not about telling people what they can and cannot do in their investing. It should be trying to help them be better at what they're doing.
I have an opportunity to have a conversation with Fred, who's been in a kind of a unique position because as far as retail customers go, he used to be my boss at TD Ameritrade. He bought the company that I used to work at. We were a thinkorswim. We were a fast-growing derivatives firm, did a lot of option trading. And now he sits at the helm of the originator of options, the Cboe. So he kind of has an interesting perspective on the retail trader, particularly as it pertains to options. So what I wanted to do is just kind of have a conversation with him about where he sees the industry. And by the way, I started my career in the 80s at the Cboe. I would have never imagined the growth that we've seen in option trading and the number of people that are using options. It's amazing. It's wonderful. I love to see it, but I want to open it up by just letting Fred tell us his perspective on what he's seen through his career.
Yeah, so I've had a varied career. I mean, all through financial services. So I was in banking, then insurance, back to banking, over to wealth management, and then ran some corporate areas of a big bank, and then wound up at Ameritrade. And so I've seen it from a variety of different angles, and I've seen people be afraid of options. I've seen people diss them for a variety of reasons, but no differently than you would have seen 30 years ago, where people would say, we can't let the retail investor, the retail trader, even buy equities because they don't know what they're doing. And this is dumb money, which is, nothing could be further than the truth. And from my point of view, it's not about telling people what they can and cannot do in their investing. It should be trying to help them be better at what they're doing. And that's a big difference, and companies take different approaches to that. With respect to options, so when I ran Ameritrade, I took over, I was in management as the chief operating officer and was essentially running the company for about a year before I took over because we had some integration issues between the old TD Waterhouse and Ameritrade. But I took over on the eve of the Great Recession. So if you could imagine your first day in the job, you land in the job and all of a sudden the world's blowing up, Merrill Lynch is going down, Morgan Stanley, Goldman Sachs, they were all in trouble. And so that was my first instinct, because we were, back then, Ameritrade was just an equity trading shop and had consolidated the industry. But we saw this little company called thinkorswim that was actually growing quite nicely. And one of the things you learn in this business is that an equity trader in a down market will freeze and say, I don't know what to do. I'm just going to play it safe. Whereas a person who can trade options can trade through any environment. And in fact, that's what we do at Cboe, is try to provide a suite of products, option-based products that you can trade through any environment and take advantage of different markets. So, I've seen it, and when the options came out, you always have this fear when you first get into it, but that's why you have to pivot into this thing called education, which Cboe's been doing for 35 years. And we did a lot with the thinkorswim guys, and Steve and others at thinkorswim were very good at that. And the technology was great. So this is one thing that I've seen really change over my career in financial services, and mostly in this space, is how much technology has changed everything. I can remember still, when you have to call a broker, place a trade, you call, you might get a response 2 or 3 days later, and you probably paid $250, $300 to place that trade. Whereas today you can basically go online, you can look at that stock, you can press a button, bang, and with under a second, it executes, the price you got, and it was zero commission. And so it's amazing how much it's changed over time. And then options, it basically gives you a way, if you have a long portfolio, it just gives you a way to sort of enhance your income on it, to protect it when you're worried about it, to maybe make a speculative trade when you're more bullish. But it just gives you so many ways. And in the option space, when we bought Thinkorswim, Ameritrade, their percentage of volume in derivatives, both options and futures, was 2% of our trade volume. When I retired 10 years later, it was 45% of our trade volume, where people started to learn how to use them and how to use them properly. And so it's evolved quite a bit to today. It's one of those areas, the whole option industry, both institutional and retail, but in particular retail is growing, and the adoption of options is growing, not just in the US, but around the world.
Yeah, I think Fred, you touched on one thing that I think is sometimes overlooked. The educational component it's really important, and I know you know it. Cboe's been doing it for decades, but you guys are all here for that reason. To help become. This is hopefully helping you. These sessions become better traders, option traders, and I just think that it's so important that you continue. Like if you're curious, you can continue to learn and you can continue to evolve as an option trader. But there's like for every customer, there's a certain point that they want to get to. There's some that want to go way up the scale. There's some that are very comfortable writing a covered call or selling a covered put, up to some that want to get into very complex strategies, which are fine. The nice thing is you have education for all of it, right?
Yeah. I would always advise you to start with the education to make sure you understand it and how to use them and how to use them properly. Because, if you don't learn that, I'll guarantee you eventually you will blow up. So you have to just like investing in equities or anything, you have to have a strategy, a methodology, and stick to it, and don't get too greedy. Start with the basics.
Yeah.
Take the courses, learn to sell covered calls, maybe cash covered puts. Just generate some income. Don't get greedy right away, and then once you get more comfortable, you can work up into spreads and defined outcome trades. And when you do that, then you start to get smart, and then you can be quite creative in what you do because you can do almost anything with options. There's so many, expirations and strike prices and whatnot. You can take a variety of strategies around your portfolio, but don't go there initially unless you really understand what you're doing. Take the education; it'll pay off for you.
I said this. Who was in that session yesterday where you put the trade on? Yeah, we're doing well, aren't we? What's Netflix doing today? Yeah, what is it? We're still golden, right? We're still golden. We sold an iron condor, so even though we were not really accurate, we're still going to be golden with that, hopefully. But we talked about something in that session because I think it's important to understand. Like when you talk about options, you can when you first get into trading options, they can be overwhelming. There's a lot of things, the Greeks, and I got to learn all this. But as I said yesterday, it's like the Taco Bell menu. There's like 5 or 6 ingredients. They make a lot of different things with those 5 or 6 ingredients. That's really option trading. Once you understand the basics of a covered call or a credit spread, it's just layering those things together that turns it into something that might look more complex, but when you break it down, it's actually really simple strategies. And I just feel the more people use those and start to understand them, and Fred, as Fred said, you do it really small in the beginning, the better you get. And once you get comfortable, you can see how passionate people get about trading. Well, they get passionate about trading, about the market in general, but particularly about options. So the product that we are rolling out with the help of the Cboe are index options. How many people we've had a lot of requests from you all in this audience for index options. Who's been hitting us for those? Yeah. And they're coming. You excited? So I wanted to give Fred a chance to kind of talk about them because the growth there has been pretty explosive. And you can talk about it, Fred. How?
Yeah. So I think it's important you understand the uniqueness of the index option. So index options typically provide you with broad-based exposure or protection, but it's going to be off of an index like the S&P 500. So you use the SPX as an example or XSP. You can also do small cap with the RUT 100. So you get this broad-based exposure. But what's more important to understand is the difference between a European-style option and an American-style option. Most single stock options typically are American-style. And if you take the index options, they're going to be European-style. What that means is they only exercise at the expiration. Whereas in American-style, somebody can call your trade away. So if it goes through and they're in the money and they want to take that stock or that index or whatever, they'll take it away from you. And so if you're doing a multi-leg trade, all of a sudden one of your legs is gone and you're exposed in a way you didn't know. So an index option, that European style, is important because it won't get called away on you, and it's cash settled, whereas an American style is typically physically settled, meaning you get the stock. So if you bought a call and it goes through it, you exercise your right, you get the stock, or if you have to sell it out, you've got the stock. And that creates other kinds of risks, like overnight risk, or you've then got to place another trade on and those types of things. Whereas with a European-style cash-settled index option, you put it on, you don't need to worry about it. It's going to expire and cash settle right into your account on that day. So that's a very great feature for most retail traders. That's why it's very popular with a lot of traders. And again, it gives you that broad-based exposure. And even if you have a portfolio that is not far off the S&P 500, you can use these for to hedge risk management or whatever, because it won't give you the perfect hedge, but it'll give you a close hedge.
Yeah.
And then lastly, they get favorable tax treatment. So whenever you use a European-style index option, that basically is the traditional way it gets taxed is 60% long-term and 40% short-term capital gains, regardless of how long you hold it. So it's one of the unique features. It has a favorable tax treatment as well. So they're very useful tools. A lot of traders will do most of their trading will use index options for those very reasons.
And I think if the progression that we've always seen is, we kind of talked about it over the course of the last couple sessions. You see people that start to trade equities, they learn the equity market, they move into the option market. They'll start with covered calls, generate income, or buy a call, buy a put for protection or for an opportunity, then get a little more advanced and start doing some what we'll call level 3 strategies, some complex strategies. But then they sort of gravitate into cash settled indices because they don't like first of all, the tax advantage, but they like the idea that they can get exposure to the broad-based indices without having to worry about being assigned a stock, which is not optimal. They fix this to a certain extent in the futures market as well. You don't want to trade a future and end up with, thousands of barrels of oil in your front yard. So it's quite similar to that. That's the big advantage. And that's why I think a lot of people like cash settled indices. And you don't have to worry about that assignment, that comes along with it. I wanted to ask Fred, so in kind of looking back as you've seen the growth of the option industry and just the growth of retail traders, where do you think we go in 10 years? What does this look like in 10 years? Where do we land?
Yeah. So I think, the analogy I'll use is a bit of Apple, right, whether you're an Apple fan or not, is how they've been able to make technology and the interface with technology so simple and intuitive. That even one of my grandchildren can figure that thing out and really quick. And I think what Robinhood's done uniquely, Ameritrade tried it, but things get better over time. I think what Robinhood's done is make it so easy, so simple, so intuitive. I love the bars you had yesterday where you can just click on different prices you want to put your order in at and all that kind of stuff, and just make it so simple, easy, and fast. And you can think, well, geez, that's simple. That's hard to do because in behind there's a lot of stuff going on. But that's really what's happening with technology. Technology has changed so much of our lives, and no more so than in investing and trading, where everything can be at your fingertips on this particular, just on a mobile device. But doing that is actually hard work, and I think Robinhood's done that very, very well. when I look to the future, you can see a world where I can see all kinds of new asset classes emerging up. And some of you would have seen the guy here that started off with creating an exchange or a buying network on running shoes and going into, sort of things like that. And so you see that. I can see a world where, years from now, you could be trading computing power. If you just look at the world today, the race with AI, the chips, and how much the data centers are growing, and computing power could become the new oil, as an example. And it's becoming a bigger part of a company's income statements than people. And so you can see a world where you're going to see all kinds of new asset classes that people can trade and invest in, and do that through that mobile device. And as Steve's right, when we bought Thinkorswim, I can tell you my board was like, "Are you sure you want to do this?"
It was because of me.
Yeah.
Like this guy?
Yeah. I would have thought we would do okay. I never dreamt we would grow the way we did. So never in my wildest dreams that I think 45% of our trade volume would become derivatives. And I would have never believed, and I tell some people this, that the number one, which broker in the United States places the most option trades today? When you say Robinhood, no one believes you. But it's true. And they passed, the combination of Schwab and Ameritrade. Historically, that was Ameritrade for many, many years. But the fact that you guys have done that in the period of your tenure is truly remarkable. So I'd never underestimate how fast the world can change and how new technology will change what we do and how we do it.
So there's actually an AI panel after us, and we were talking to them a little bit in the back, but it's interesting you brought that up because the idea that since you're sitting at the helm of an exchange where you think about products that you're going to roll out, and the idea that you could roll out products that are on AI, energy, et cetera, the things you mentioned, you'd roll that product out, but you'd also roll out options on the product, right?
That's
and
right.
we'd roll out everything on that product, which is kind of exciting because if you think about it through that lens, what don't you want to trade? What would you want to trade? I would want to trade a lot of things. There's already weather futures, there's already water futures, but you can just imagine whatever becomes a commodity being a tradable instrument, like more so directly tradable. In other words, I don't have to do a proxy for energy by, trading oil. I can do directly whatever it is. But how do you guys think about when we're getting into products? And I don't want you to give away any secrets, but how do you think about what do we explore next to make, what's the next thing we're going to think about as a tradable instrument?
Yeah, well, we always, listen to our clients. So we get out and talk to them about what they're looking for. We have, the biggest institutional clients, the Citadels of the world, which are big market makers and big proprietary trading shops. And so they have ideas. So it's important to get out and talk to them. But also increasingly important is to go out and talk to people like Robinhood and the retail brokers that are on what I call the cutting edge of the thinking in this regard, leveraging technology and trying to create new things. And so you get that and you get ideas. And then when you come back, you start to think, okay, well, how can I trade something about that? And you're typically going to start, with, you'll have a product. So like the example we use all the time is, SPX. Yeah, that's just on the S&P 500, which by the way is the largest, there's $16 trillion globally benchmarked to that particular index. And so, unlike others where we sort of have that license for that index, and then you just put an option or a future on it and put it out, we will start to create products around it, basically that you can trade through around that instrument through a variety of ways, such that you can trade through any environment. So we always think about creating an ecosystem to give investors and traders products that they can trade and optimize, whether it's to hedge risk, generate income, or place a speculative bet. But to do that around that index using a variety of products and index products, such that regardless if you're a retail client or an institutional client, we can give you the product that you're looking for through any environment you can trade all the time. So because it's one thing to trade in a bull market, you can think you get brilliant, but you really don't know what you're doing until you go through a bearish market. And so we try to create a sort of a series of things around that index to give you ways to manage through that so that you can optimize your returns.
If you think about it, the average age of a Robinhood client is low 30s. They haven't really sustained a real bear market. And so it changes behaviors when you're in I'm not wishing it upon anybody. I don't want it to happen, but we know it's going to happen at some point. So, learning how to navigate that is important before you get to that point.
So I would even say today, people get a bit freaked out about volatility because the VIX is up at 20. That's its long-term historical average.
Yeah.
The anomaly's been the last 10 years has been the anomaly, not the norm.
So, Rob, we've been very passionate about something. We're talking about trading products, but we've been very passionate about when they trade, and I'm talking about trading around the clock. But we are aligned here because we provide access for people to trade around the clock on 1,000 symbols. You guys are all aware of that. Cboe provides access to trade options around the clock. Nobody else does. So how do you think about that? What do you think that means for volume, and where does that volume come from? I mean, there's a lot of overseas volume and there's a lot of U.S. demand, but how do you see that unfolding over time?
So we do see that. I mean, the global markets have capitalized. I think I start with a point of view. If you go to various countries around the world, because we are a global exchange operator, and so everywhere I go, everybody would like us to do what we do in their market, so they get that. I mean, bring competition, bring options, etc. And so, we definitely are doing that. We're doing that in Europe right now with something called CEDX, which is bringing derivatives to the European market, which is a first. But at the same time, they all say, but I want access to the U.S. market. And if you think about it, we've just gone through, looking at our strategy. And, there's 27 or 28 trillion dollars of foreign holdings of U.S. securities, both fixed income and equities. About 14 trillion of that is the U.S. equity markets. The U.S. equity markets are larger than any other country's GDP in the world. So it's a very big, very deep, highly liquid market. And people want access to that. So that gets back into the 24/5. So if you're in Japan, you want to trade during the, you want to trade during the day, not necessarily in the middle of the night. And so, we see this as an evolution where we call what we say our import business is to give those people access to the U.S. markets, and that means doing it around the clock and improving their experience. Because this whole thing about the growth of the retail investor, the use of options is not just in the U.S., it is global. And this demand for this is quite big. And I know, Steve and I, have in our past, we started up an operation in Singapore that did quite well, but they were mostly, all we were giving them was access to the U.S. market. They do, they may want to trade in their own market, but that's that. And if you went back and looked over the last 5, 10, 15, 20, 30 years, and you looked at the returns of various equity markets around the world, the one that stands out consistently as the best performing, and not by a little bit, by a lot, is the U.S. market. Never underestimate the power of the U.S. market and the demand for it. And there's a reason for that. If you go back and look at performance, the stability of the dollar, all that kind of stuff, it is a very powerful, what we call long-term secular trend.
So I think it's a desire. I know my desire, but and by the way, who all trades in the evening? Has traded in the evening session? Okay, a couple of us. Yeah, it's useful, right? I mean, the one thing that we discovered when we were thinking about this, Vlad's been very passionate about this since the day I walked in the door here. Like, a lot of people do their research, they do their homework, they look for their trade or investment theses in the evening, because they might work during the day. And it's very foreign to them that they can't just put that trade in, pick the level and enter that trade. I think everybody's used to an e-commerce world. So, in the old days, they used to say, oh, no, you need all these, people standing on a trading floor. Well, COVID kind of disproved that. I think we didn't have anybody on a trading floor, and it worked pretty fine. So it's my dream, and I'm going to lean on him to have more and more instruments that trade around the clock. Like I think everything should trade around the clock. I don't think it should ever close. It's an electronic exchange, right? So,
Yeah.
we already have products. You already have products. I don't know if you knew that, but those options trade. They're 24/5, right?
That's right.
Yeah.
Yeah. And so, and the interesting part with us now, we've innovated to a point where you have an expiration of an option essentially every day of the week. And you can definitely see it going into 24/5 as capital moves around the world. It's going to happen. With technology, there's no reason it can't. I think you could also see a world where, we've gone now from T+3 to T+1. I can see T. When you think about technology today, there's no reason it can't execute that quickly and just get settled real quickly. And so, that's going to happen. It's just a question of when.
Well, you brought up the expiration every day, so I have to
Yes.
ask you about short dated options, because there's a lot of people in here who probably trade them, right? Short dated options are super popular, very popular. Look, we all hear what the regulators and media and everybody, oh my God, you shouldn't be doing that. Look, I think they're a great precision tool, but how do you guys think about them? Because the growth has been explosive.
Yeah, well, it's again part of our journey of innovating and just allowing people to trade through any environment. And we're in a world today, whether you like it or not, it's a news-driven world, it's an event-driven world. Just think, how much people watch the market when you have a CPI print, or the Fed releases their decision on interest rates. So you have these events that have really become things that move the market. And Steve's right, basically, and what the short-dated options allow you, they're a very efficient way to hedge risk or take advantage of an event in a very short period of time. So that because the premium's so low, it's just it's a fantastic tool. And this is something from demand, because it used to be once a quarter, then it was once a month, then it was once a week, and we kept talking to our clients, and they said, well, why don't you do Tuesdays and Thursdays? Okay, so we started doing Tuesdays and Thursdays, and the product took off, and so then we did Mondays and Wednesdays. And so you wind up in this world where you just keep listening to your clients and recognize the world that you live in is changing. We've got 2 wars going on, we've got an election coming up, we've got the Fed pivoting. It's an event-driven world, whether you like it or not, we are. And what's called zero-day options, 0 days to expiry, have been around for a long time, because you can always trade that option 1 day a quarter on that day. And so when you think about it, it's these simple innovation. Just say, well, why is it just that day? Why don't we make more expirations and allow people to get cheap insurance, as Steve said, around an event and a day that you're worried about something? Because it may be the Fed, it may be the CPI print, it may be the election, it may be something going on in the Middle East or over in Russia, Ukraine, that's worrying you and causing you, when you're investing. So it just gives you a very efficient way to sort of hedge risk around an event that you're worried about.
So I'll wrap it up with a funny story. I don't know if anybody saw it, but we had a Wall Street Journal reporter, who decided that she wanted to experience short-dated options. So she let us know she was going to open an account with Robinhood and trade, and didn't want our help. She's just going to trade short-dated options for a week. So she started with $500. Her plan was trade them every day, and then if she made money, give it to charity, which is great. If she didn't, then she learned, and I think she made like $1,450. And then she posted her article, and it was on Twitter, X, whatever we're calling it, in addition to the Wall Street Journal, and and she posts the article, and her mom replies on X and says, "Keep doing it." And I'm like, always listen to your mother. With that, I'm going to wrap it up and let our next panel come. Thanks to Fred and the Cboe for everything they did during this conference.